From SBI's Executive Briefing Center in Dallas, Texas, the most watched and listened to content in B2B sales and marketing, it's the SBI Podcast with your host, Matt Sharrers.
Welcome to SBI TV, a weekly show dedicated to helping you make your number. I'm Matt Sharrers, I'm the CEO of SBI, and I'm going to be your host today. Today's guest is Jared Paul. Jared's the founder and CEO at Spiff. And I was really excited to have Jared on the show, not only because he's a really good guy, but he is a serial entrepreneur. And Jared, keep me honest on my numbers, but a little birdie with the initials MV, who works with me, said 4 companies, this is company 4, and you've had 3 successful exits.
Yeah.
Dude, don't be humble. It's okay. It's okay. There's a chest pounding background on Zoom. So yeah, there you go. That's what I'm talking about. Now we're in business. So great to see you. Great to see you. So
hey, great to be here. Thanks so much.
Yeah, man.
I really appreciate that.
Jared, here's why I was excited to have you on the show. A, we're going to talk about tech and go-to-market tech. We get a ton of questions about tech stacks, data. How much is enough? What should I use? So you and I are going to spend some time on that because our viewers and our listeners like that. We're going to talk about your solution and where you all play so people understand that. But I also want to talk about you as a CEO who understands what it takes to drive value, because there is no replacement for people who can start, grow, and exit a business the way you have. And to do it multiple times means you know what you're doing. So by way of introduction, maybe tell us about Spiff, but give us the 90 seconds on the 3 previous ventures.
Yeah, and maybe I'll do it in reverse order if you're okay with that, Matt, because Spiff kind of grew out of it. So my first venture was actually a startup. I started right out of business school with a professor of mine, and we had this idea to create. This was a while ago, 2004. So we had this idea to create basically a portal for boards of directors of Fortune 500 companies. It turns out that they didn't really have much technology to help them in their roles. Yeah. And so, I was laughing. Yeah, I love chest pounding, but I was laughing a little bit when you said 3 successful exits, because this first exit was really like an exit in quotes. I started the technology and started working on it out of business school, ended up kind of being subsumed into Thomson Reuters. It was almost like an acqui-hire. I made about $0 on that one, Matt. So, but I had an amazing experience, and it really actually piqued my appetite for what SaaS. I just became like a total SaaS fanatic after that. And when you see what software can do to complex business problems, it's pretty addictive. And so from there, I started another company that was a valuation software and services company. And I sold that in a management buyout and did quite well on that one. And then I started another company after that called CapShare, which was an equity accounting and shareholder management software platform. So for companies that needed to manage their shareholders, and issue stock electronically, we facilitated that. And I sold that company to a company called Solium, which was acquired by Morgan Stanley. So that company is now a subsidiary of Morgan Stanley. And so, yeah, while I was the CEO of that last business, me and my co-founder, Matt Stapleton, we were running the sales team. And as I'm sure you can imagine, one of the last things you want to do as a founder is worry about commissions, but you can't not worry about it, because it drives insane performance out of your team, and they all depend on it. And if you don't get it right, there's a laundry list of disputes and questions that you're going to have to manage. And so, while we were doing that, we were while we were up probably late one weekend working on a commission spreadsheet, we just kind of scratched our heads and say, my gosh, we've made the last kind of 2 companies we've started have been complex Excel spreadsheets that we just said, okay, why don't we just turn that into a business? And we thought about that, and we said, my goodness, this is like, we have a business idea just staring us in the face right here. Why don't we just take this complicated Excel spreadsheet that we're using to manage commissions and make a business out of it? We interviewed like 120 customers to get a sense if this was going to be a good idea. And these were mainly finance and sales ops folks. And one story I love to share, Matt, is we asked a really open-ended question where we said, just tell us, in open-ended terms, please describe your commission process. And one guy I remember wrote back and said, it's like Victorian style manual labor minus the smog and adverse working conditions. And so I knew when I heard that, I was like, okay, someone is literally equating this to being in like a Dickens novel, in like a factory, being like completely, worked 20 hours a day for low pay. And we just kind of thought, yeah, this is a good idea. So that's the genesis of Spiff.
How old is Spiff now, Jared?
Spiff, well, so when I sold my last company, they wanted to retain me, and I negotiated that down to a year before I could leave. So I actually started working on it nights and weekends during that year I was still there, and that was totally above board. I actually negotiated that in the acquisition document, but I really joined full time here 2 years, 7 months ago.
Okay,
so
got it.
We're not super old, actually.
Yeah, but that's exciting. And for those that aren't familiar, how would people think? And you explained obviously who you work with and sell to. How would people in our audience and viewers, if they were kind of thinking about the market and maybe other providers? So if Spiff is an alternative to, I'll let you finish that sentence.
I mean, we're in a class of our own, so I can't answer that for you, Matt.
Dude, I threw that. I laid that up.
There are some that are kind of close, so and no, I mean, yeah, certainly there's some big vendors that we actually consider them kind of pioneers in the space. So tons of respect for them, like Calidus, Exactly. Yeah. Those are some of the big vendors that we kind of feel like.
Perfect.
We kind of view them as like version one of this problem, and pioneers in the space have done. We again, just immense respect for them. They did a lot.
I'm very familiar with both, and to the audience, part of having Jared just kind of level set where they play, just to help you understand, what does Spiff do as you continue to evolve, and as we continue to provide folks the ability to pick the right tech providers. We don't have a dog in the fight one way or another. It's always nice to kind of think about people in certain categories. So, Jared, one of the things that we've observed, and I've certainly observed the last 12 months, is the ecosystem and the concept of an ecosystem in different industries. There is one that has truly formed in and around revenue growth, where oftentimes at SBI, we kind of feel like we're in the center of it because we don't do everything, but we feel like we kind of have to put pieces together for our clients, whether it's us building the revenue growth strategy and helping with some execution, or then saying, okay, you need tools, you need data, you need activation. Here's a set of folks. Here's how you think about, incentive comp management versus sales enablement versus rev ops versus et cetera. So with that as context, how do you sort of think as a CEO, how do you think about the right tech stack for what you're doing and how you're not only driving what you're driving from a product, but driving what you're driving as a CEO?
Yeah, I mean, what a great question. We talk a lot about what we call instrumentation. I think there's the analogy of, doing a startup is like having someone throw you off a cliff and you have to kind of assemble, your flying apparatus while you're falling. I like that analogy a lot because you're kind of startups are valued primarily on growth. Well, actually, stepping back, all companies, I have a bit of a background in valuation, and there's really two primary. If you study valuation of companies very long, very hard, it's a bit of an oversimplification, but there's really two main drivers of value, company value, and that is the potential for profits and growth. Those are the two big things that drive value at a company. Yep. To your question, I love how you started it out, which is, that's why companies are so obsessed with growth, is because it's one of the two primary drivers of value. And actually, if you were to do a rough analysis of that in the software industry that I play in, SaaS, I think it's almost 2-to-1 in the sense that growth drives twice as much value as your profit margins do as well. And that's why you'll see in the venture-backed world, people just go crazy when companies are growing really fast because it's a signal that the company is going to be worth a lot of money.
No doubt.
And so I think that's why CEOs are really growth minded and should be. And that's why we have this whole new function called RevOps. And, sales and marketing's been around a long time, but now every year we're trying to oil that machinery to make it even faster and smoother so that we can get growth even faster and better every single year. And I think that leads to new innovations like the RevOps function. In terms of technology, going back to that analogy, you're thrown off a cliff, you're trying to assemble this airplane. The first thing you probably want to do is get some wings on, but
right.
shortly after you do that, you need to have dials in front of your face. You cannot fly a plane not knowing how fast you're going and what your altitude is. And so we talk a lot at Spiff about instrumentation. And we all wish instrumentation was free, right. But it's not. And so that's the perpetual trade-off in business, which is there's a cost associated with getting more data. And you need data to operate your business, but then how much do you want to spend to get that data? You know what I mean? And there is a curve there. So, at some point in time, you get diminishing returns. You keep spending more and more money to just get marginally useful data. So the data that we, going to your point, obviously, I think we all have and I'm sure we'll get into it more, but, we certainly think very long and hard about the key pieces of data and the KPIs that we need to run our business. And I'm happy to go into that more, but I want to make sure I'm going in the right direction.
No, you are. I mean, it's amazing to see in the time that we've been around, we're 15 years old as a firm, the proliferation of tools, of go-to-market tech tools for more data and more information. Right. And when we originally started SBI, it was all in the concept of bringing science to sales and benchmarking. What did that mean? Obviously, we've continued to evolve and become a true end-to-end consulting firm. But I guess, so my question would be this. If you think about all of the data the companies are collecting, and even as you guys are continuing to build what you do at Spiff, what is the absolute data you have to have, if you think about from the lens of a CEO where you're like, you got to know these things? And then if you kind of move to that next level of data where you're like, nice to have, but not a need to have, right? Where does that sit? Because I think people really want to dig into what's critical versus what's convenient, but not critical.
Yeah. And, and I think it depends a bit on the stage of your company and possibly on the industry of your company. But clearly the metrics that I think about every single day are, revenue to plan. So, like revenue top line is just absolutely critical. And top line kind of breaks down into, hey, what's my actual like dollar number? And for us, we like a lot of SaaS companies, this is a bit of a feature of SaaS or a peculiarity of SaaS, but we don't even really care is maybe too strong of a word, but we don't really track or measure our non-recurring revenue. Mm-hmm. And that's because we view that as icing on the cake. And so what we really focus on is our ARR, average recurring, our annual recurring revenue. So we track that. I track that, on a daily basis. Obviously, then you start thinking forward looking, okay, well, what's my revenue now and what was it last month? So then you start thinking about, okay, what's my growth rate, right? And that's very important. And again, I track that on a regular basis as well. So how we're tracking and growing towards our goal, that is probably literally the top line, thing that I think about more than anything else as a CEO. And we obviously I care a ton about our product. Right. So I track other metrics around like Net Promoter Score, mm-hmm. and some internal metrics, how our teams are doing and how well I feel like we're developing leadership at Spiff. And certainly whether or not we're creating a truly, and I mean this sincerely, whether we're creating a product that's in a category of its own. I think a lot about that. But as far as like metrics go, I'm the daily one is revenue. We actually have a Slack channel inside Spiff that lights up every time we book a new company.
Oh, that's cool.
And that goes to the entire company. And so it's amazing. I mean, it creates this incredible and powerful aligning, source of celebration for all of us. There's a ton more here. I mean, that's the very highest level.
Good.
And
Perfect.
You kind of asked about, do you want me to keep going, Matt? Because
No,
there's several more.
Well, I think where I'd want to go is actually parlaying that into Spiff, the solution. So in terms of the job to be done and the problem that you're solving, I'm a chief commercial officer. I'm watching this show right now. Now I've heard of Spiff and I'm saying, okay, what problem is it solving that currently I am probably underwhelmed with my current solution? Tell us about that.
Yeah, well, let me start with just a couple of high level figures. I mean, it turns out that there's a higher return on investment in sales than there is on basically any other asset inside your organization on average. So you get a bigger return by investing in sales than you even do in marketing for most companies. Yep. And so, and then sales on average, according to Harvard Business School data, represents sales commissions. Just commissions represent approximately 10% of the typical company's budget. So when you really aggregate that, I mean, this is a massive chunk of change that most companies are spending. And look, they're spending it. What's the purpose of commissions? Is the purpose of commissions to just give people money? I mean, no, the purpose of commission is to drive revenue, right? It's to drive results and growth. And also to absolutely create a culture of growth inside your organization. So, we look at this as a massive ability for you to go in and actually realize a much bigger return on one of the biggest investments you're making in sales. Because when you deploy Spiff, I remember one of the first times we launched Spiff. Spiff comes in and where most sales reps are selling all month long. And then they're used to kind of seeing their commissions maybe on a 15-day lag after the end of the month. So if you think about it, if you close the deal at the beginning of the month, it's not at all uncommon. And some companies are on quarterly cycles, but let's say you're on a monthly cycle, right. You close the deal at the beginning of the month. It's not at all uncommon for you to not see a commission check on that or even an estimated commission until like 40, 45 days later. That's not very helpful when you're trying to drive performance in the moment, when you're trying to get, right. And when the reps themselves want to hit targets, and so I remember when we deployed Spiff at one of our clients, one of our first clients, we literally got a standing ovation because the sales reps, like when we came in the room, they started clapping because they were like, hey, this is the first time we can actually see what we're getting awesome. Paid. We don't just have to rely on finance and have this back and forth, which can be like, contentious sometimes and can be demotivating for both parties, and we can actually see it. We can see our performance in time to actually course correct and make changes. So where we can hit our financial goals. I used to laugh a lot. Matt, I'll just say one last story. I used to laugh a lot because I've run a lot of sales teams and we always buy our sales team members 2 screens, 2 monitors. You probably have 2 monitors at home. And they'd always have Salesforce or some kind of CRM up on one of the monitors, but they'd always have a spreadsheet up on the other one. And so finally I asked my VP of sales at the time, Billy Rogers, I said, Billy, like, what is that spreadsheet that everybody has? And he said, come over here. He sat me down, walked through it. It was the list of all of his deals, the ones that he thought that were a stretch, but if he worked on them, he could get even a couple other ones were even further stretches, estimated commissions, right? He had all these commissions worked out. And at the bottom right, I said, what's that big number in bold down there? He's like, well, my wife and I were saving up for a boat. And so this is how I get to it. And it sounds funny, but I love to remember that story because sales is hard. It's really hard.
Yes.
And reps, motivation is the foundation of sales performance. And that's what reps are doing. They're finding a way to keep themselves engaged and motivated every day because it's a hard job. That's the reason why they get paid so well. No doubt. And so we're really trying at Spiff, we talk often about, the first screen of sales is your CRM. At Spiff, we really want to own the second screen of sales. So we really want to be
the second screen.
The second screen where you drive the performance of your reps.
That's good. Yeah. Okay. So I want to take a little transition because in terms of owning the second screen, it actually made me reflect to my first sales job and actually doing my commissions by hand, submitting them. Dude, I'm not kidding. Oh,
I know. I believe
submitting them on a piece of paper with all the accounts to my sales manager and then crossing my fingers and hoping that made it in to what was called the Employee Status Notification, ESN, which meant it was going into payroll. And you'd be like, yes, my commission check is coming. So dude, I got great memories from doing that. I went from pro hockey to calculating my own commissions, but that's a topic for an entirely different show. So
that's awesome. I want to have that story right now, man.
So let me bring you to this last segment. We 2 weeks ago we held I think it was our 28th or 29th one of our growth forums, and we had chief revenue officers. And we've talked about this evolving shape of the different types of sellers because of the pandemic. So sales development reps, business development reps, lead development reps, account development reps, a traditional inside seller, fields, like there's many different types of reps that are out there, and the commercial models have changed. Because of the impetus of digital and what that trigger event's done, Jared, how have you seen your technology and your data being used differently? And what do you recommend that CEOs and chief commercial officers should be doing coming out of the pandemic that they're not?
Yeah, I mean, the pandemic, it definitely drove a lot of rethinking of a lot of work patterns, right? I mean, from in office versus out of office. And I think we're definitely kind of seeing, probably a secular shift there in our lifetime. I think it accelerated, Spiff. When I remember in February, Matt, speaking of, being every CEO is a salesperson, right? We all are, whether we want to own it or not.
Absolutely.
We all have a number, and we gotta hit it.
Yeah.
And I remember just swallowing really hard in February last year, and we actually revised our top line numbers downward. We ended up. So this will tell you a little, this will answer your question. We ended up beating our pre-COVID forecast by about 10% or so. And
dude,
so,
good for you.
yeah. And I think the reason is, I think companies are actually, I feel like Spiff is one of the next big, I won't be too cocky here. I think it's one of the next big adds to the finance and sales tech stack at a company that's really serious about growth and is serious about driving optimal sales behavior and sales performance. It's a manual headachy process. I mean, SBI is amazing. I'm a huge fan.
Well, thank you.
I've kept most of my comments geared towards CEOs and sales leaders, but this problem is a pull your hair out problem for the finance team, actually, because, poor finance, do they ever when do they get love? Oh, great, you shaved a half a point off of our, cost structure. I mean, like they just get hated on all day long by sales, because sales views them as like chief sales inhibitors. You know what I mean? And
the no machine.
And so this is a real, we laugh, but internally this is a way for the finance team to look like heroes in front of the sales reps again, to get themselves out of gnarly spreadsheets that are error prone. This is compensation. So you actually can't make mistakes because it's costly in a lot of ways. And it can actually, it doesn't usually, but it could lead to a lawsuit if you get it wrong. So it gets them out of all that, and it automates all that. They can set it and forget it. At the same time, it's a gigantic benefit to their sales team. So, going back to your question, I know that would sound like a commercial for Spiff, but what I've noticed is that SaaS apps that are like this, that are automating complicated processes that honestly, in some ways in the past, maybe you could have done them, but now that you've got a distributed workforce, people are in and out of the office, they need to be connected in more in tangible ways, but it needs to be done through platforms that can handle people in and out, inside and out of the office. And you need to incent and motivate folks, whether they're in or out of the office. I actually think it's been a huge driver for Spiff.
That's great.
And so, I would imagine that lots of other CEOs are seeing that. And I think that's why, SaaS apps that are killer at what they're supposed to do, where you can really take one problem out of, off of your CFO's problem stack. I think we're seeing a lot of that coming out of the pandemic, where it's just like, okay, wow, there's a point solution now for, for training my sales reps. There's a point solution now for recording calls and making sure that I learn the most from them. There's a point solution now for commissions. And, I honestly think commissions is a really huge, meaty problem that represents a gigantic cost structure. And like I said, kind of this source of constant friction between sales and finance. And we really want to be that tool that lets finance and sales renew their vows. So they're excited to to be together again.
The owner of the second screen and the vow renewer. Dude, that's your that's your handle. That's right.
Yeah,
at vow renewer. So well, Jared, obviously love spending time with you. You got a great point of view, and I'm always a fan of those who can start and get things done as an entrepreneur. So congrats to you and the Spiff team. To those watching, I think Jared brought a couple of great points for us to share. Number one is, if you think about the connectivity, and he talked about RevOps, very oftentimes we see that sit inside this function we call the revenue growth office. And that's really what it takes to run a commercial function, regardless of size. And you need a central fact base and kind of a central PMO. And a solution like Spiff's sits in there nicely because it does build a bridge. Jared, I think the other thing, a big takeaway for me and for the audience, is if you think about the way a seller is motivated and what they need visibility to, because we live in a world where data is flying and there's so much customer data, intent data, propensity to buy data. Like, there's over 1,100 tools in the go-to-market tech stack ecosystem. You talk about a crowded, and it's growing. It's not diminishing, and many of them are venture-backed, and a topic for another show. But I think that's the other connectivity where individual contributors, sellers, love you and love what your company does because you create a great employee experience for them to answer a central question that every rep wants to know, which is, how am I doing? Yep. And we believe that's a central question that a lot of people that are in a sales role, they just want to know, how am I doing? So thanks for coming on the show, sharing your insights. Continued success to you and the team.
Matt, awesome to spend time with you.
Okay, man.
Seriously.
Yeah,
anytime.
We'll see
when
you
you're
soon.
in Salt Lake, let's go hit the slopes.
I like it. Well, slopes, I'm a shitty skier, but then we'll go play golf, and I can go 1-1. So.
All right, I like it.
Everybody else watching, thanks for tuning in, and I wish you good luck as you try and make your number.
This has been the SBI Podcast. For more information on the studio, SBI's Executive Briefing Center, our team, or to schedule a workshop, please visit salesbenchmarkindex.com.